All right, guys, good morning. Good morning. Happy Saturday morning. My name is Carlos Garcia, founder and CEO of GAR Capital. You're here because we are doing the weekly video. I usually do it on Fridays, but I didn't do it yesterday. Decided to just relax and to really get started fresh on a Saturday with some fresh eyes, excuse me. So welcome aboard. It is August 5th, 2023. Thank you so much for taking the time out of your day to watch this video. Let's go over it. First thing we're going to do here is take a look at COIFIN, and we're going to look at the past 5 days here on the major indices. Obviously, on Friday we closed down 150 points on the Dow, with the Nasdaq down about 0.36% and the S&P down about 0.53. The VIX actually climbed on a Friday. It actually was a big smash early in the day, and then we got some volatility towards the tail end. You can see as of last Monday, nice push. Tuesday, pretty much same range bound. And then Tuesday, we got hit with the Fitch US debt downgrade. This created NASDAQ to fall. This created the S&P to fall, IWM small caps, and the Dow as well. Once we fell on that Wednesday, we kind of bounced a little bit on Thursday, and then we rose on Friday towards the tail end where we fell a little more. So we ended the week in the red in terms of the indices. But if you look at a 10-day period, you could see same deal on the lower end of the spectrum. And on a month-to-date basis, you can see based on the fact of August 1, not starting out great, obviously. If we go on a 1-month term basis, rolling 30 days, we are still above where we were. So you could see IWM is up 3.47% on a rolling 30-day basis. The Dow up about 1.88. The NASDAQ almost flat the last 30 days. So probably giving some of those gains back from July, and the S&P up about 0.5% in the last 30 days. If we go ahead and go year to date, give us a bigger time frame, what we're looking for. Again, this is starting from December 30th, 2022. The NASDAQ is comfortably up 39.6% year to date, with the S&P up about 16.63% year to date, IWM 12% year to date, and the Dow, mostly value names, as we've talked about in the past, are up about 5.79%. So again, this one's going to be relatively quick because this is what happened this week in terms of options. Just tough all around. We got hit with the headline of the Fitch downgrade. Here's the problem. The Fitch downgrade came Tuesday after the bell. So we really didn't have a chance to play anything since we gapped down on Wednesday. So we had Google from last week, mind you, the week before, Russell IWM, which we pushed and bought Tuesday. Tuesday, right before Tuesday close. Talk about terrible timing. I believe that was Tuesday close. Let me make sure I have that. That's July 31st. That was on Monday close. We picked up the Russell right before close. And then we kind of chopped around, and then Tuesday we had that headline. Boeing, luckily, I signaled that out for the team. I learned my lesson with UPS, 36%, just take it. Unfortunately, I held on Boeing, so I got hit on that one. But that's right, majority of you guys got it. Netflix, also August 1st, we filled that. And then what happened? We had the gap down. Luckily, I got one DM from one of our members who took it for Netflix. I believe he got in a little better price. I think he got like 30% or so, and he took it. So a mixed week, very, very similar to what we had in early July, if you guys remember, where we talked about that resilience, that it was such a tough week. And we're going to go back to that here to give us a little bit of a context. But 3 out of 6 this week. A couple of things that I wish we could have changed. A couple of things I'm glad that we didn't. Let's do the first thing. What's the first thing we would have changed? Really, what we have changed would be nothing, because we're going to go ahead and go over each of the trade and show you exactly what happened, because this is important. So Google. Alphabet reported earnings. As we know, we filled on the 27th of July. So if I can get my calendar on my phone, see if I can get this. The 27th of July was Thursday. Last Thursday, we filled this. We got this break. We got up to here on Friday, 134.07. We were green. I could have closed it, and I didn't. But chopping around, and then this Tuesday flush down on a Wednesday absolutely killed premiums. The good news is that Google hasn't broken anything. So if we get above 134, we still have a target to look at 140.80, which is another gap fill if we get above 134. So we filled this gap here. Let's see if we fill this next gap up. So I think Google pays us back as soon as possible. Not sure of next week. Remember, we do have CPI. We're going to go over all that stuff together. But Google, we just got railroaded on that one, unfortunately. And that was something that we held from last week. The one thing that I'm glad that we didn't do was open anything for this this coming up week ahead of time. So again, we're starting out fresh. We got all the trades out of the way. Let's see what we get starting next week. So again, no risk on the board. But unfortunately, Alphabet did hurt us. We got in again on the 27th. That was the Thursday. Had a nice push into Friday before the open, right at the open, and then we pushed back and chopped. And unfortunately, we ended up at 128.49. Once we had that gap down on Tuesday, there was really nothing to do in terms of the actual Google trade. It was already down 90, so you just had to hold on to it. We got to 132 on Friday, first thing in the morning, but just not enough to fill this slight gap at 132.97 on the 1 hour. Sometimes it just rains, guys. That's just all it is. So the bad thing was that we got railroaded there. Wish I could have taken it at 134.07, but we bought time for that reason. But I think in this market, at least in the kind of the middle of August chop, think about this. We just had a really great July. First couple of weeks of July were first week of July has been a little choppy, as we know. We talked about seasonality as well. And again, how the seasonality works in terms of the S&P 500. I'm going to go ahead and open that seasonality chart one more time for y'all. Let's go ahead and see it. Okay. So again, back to seasonality. August, we get a dip, we get a bounce, we get a dip, and we get a bounce. So again, we do have CPI next week. Again, we're going to go over that on Forex Factory. But again, none of this is really surprising as the first couple of days of August tend to be pretty choppy. We'll get a bounce mid-month. Let's just get mid-month, get another dip, and then we'll get a continuation higher based on the seasonality. This is not for sure. This is not gospel, one for one. You could see that so far it has worked out, at least in terms of seasonality. So August a little choppy, September will be the same, higher on the range, and then October will get a correction or a slam of some kind. That is expected. And again, what I expect is for us to hit all-time highs either before that October slam or after. More than likely will probably be before the October slam. So once we get to the S&P at all-time highs, don't be surprised we get some profit taking. Why? Because everyone that held through 2022 is probably going to make their money back if we get to all-time highs. So again, if you went through all this, that's over a year and a half, just to get back to all-time highs, you're probably going to take some profit. Most individuals. Again, we have to kind of be like poker, understanding what other people are thinking in the trading world so we can adapt responsibly or correctly. Let's go to Roku. I'm glad we got this one. I had a 100 call, one contract with Masterclass, and I said it was a complete gamble. Got to 25%, and of course it fell, but we caught this one. We talked about that on the watch list on the blog for the weekend. Let me see if I can bring this up. I'll go bring up, let's see here, if I can bring this up. Roku, let's see, market blog. Yeah, it was great, really on the 31st. We got Roku and Palantir, July 31st. Excellent work. You can see what we got here. Let's see, Roku. Trying to find where it was on the blog here so you guys can see it. There we go. Here are the 3 stocks I'm watching this week. This was on the 30th of July, so that weekend before. And you can see here Roku above 91.91. We're looking for 93.95 calls. DraftKings, again, they had earnings. If you would have filled those, you would have caught them. But again, it was right after earnings, so we decided not to. But we'll keep an eye on it, and Intel never broke. So at least we got Roku out of this, and well done to the team. So we got 43% on Roku on that trade. Let me see if I can bring this up here so you guys can see it. There we go. And it was great. We had a great start to the week. 42% right off the rip, looking good. We also got Palantir, which was the 20 calls. We caught that. Oh, no, that's a 95. Excuse me, got to 96%. There you go. Palantir got to 44% on those 20 calls. Let's go over Palantir again. Palantir, we got into the 20 calls. Got in the money. Literally in the money. 72% at its peak. And then we had the rollover. Thankfully, we got out. So it seems like, the market's saying either make a decision immediately. You're not allowing you to swing anything. So that's where we got hit. IWM, man, we had the calls right here to the 200, ready to go. We got in at this break at 198.58, and then we got the slam. So I can't even say bad timing because there's no way to predict that. It's not like I can call Fitch and say, hey, just want to make sure, are you going to downgrade U.S. debt? Maybe I should call Moody's and S&P. It doesn't work like that. How about some biblical approach here, the trading Bible? The biggest trick the devil ever played was to give the impression that risk does not exist. What do I mean by that? Everyone this week was asking me the same question. A lot of people, not everyone. They said, should I increase my position size? And I said, after July's great month, don't change anything. Don't increase your position size. Keep doing what you're doing. If you start changing things and you start increasing your risk, you're going to get burned on one headline. All it takes is some craziness to happen. This is what happened. So if you want to call it the Murphy's Law, what can happen will happen. It's very similar to trading. So again, those kind of risk headlines, guys, those are out there. They've happened since I've started. Whether it's a downgrade, whether it's China, whether it's geopolitical, whether it's a trade deal, whether it's a gridlock in Congress, whether it's a debt ceiling fight, whether it's the Fed, whether it's inflation, it's always something. Let me be clear to you guys. There will never be a day that you will see on CNBC, Bloomberg, or any kind of financial news or newspaper that will say, everything is okay, you can buy stocks now. That will never happen, ever in your life. The job of the media is to inform and entertain, both. And again, they know that in order for you to watch, you have to be afraid. Always been. Did you know the highest rating in terms of the Weather Channel is when? Hurricane season. The highest ratings on CNBC and Bloomberg is when we get a stock market crash. People don't care when things are good. People want to see when things are bad. That's just entertainment for some. But you will never get any company to tell you in your face, there is no risk out there, everything is fine, you could buy stocks now. Doesn't work like that. That's where you have to read between the lines of what's happening. Look at the economic data, look at the stock in terms of what sectors are moving, flows, and then you're looking at your charts, you're looking at momentum, all of that seasonality. It all comes together. It's not just one thing that makes you a successful trader. It's to be well-rounded in everything, economics and understanding how to trade and look at charts to make you a better trader. So we're going to go ahead and finish up here with Boeing. Boeing we caught. Again, I didn't close because I'm an idiot. So I wanted to hold for that breakout. We got to 243.10. Imagine that. We had the 245 calls. We were so close, but at least they caught it. If we break 241.11 again, I have no problems resending this long and going to higher above to 250. So pullback, as we know. But everyone else got it, thankfully. You could see here, I'll show you the Boeing setup. Got it at worst price, obviously 33%, and I didn't close. I thought we were going to get that continuation. Risk pulled us back. But everyone else got it, thank God. Netflix. Netflix now, we have, again, the gap to fill to the upside. We got that push to 445 on Thursday. Thought we would get that push with NFP. Didn't happen, unfortunately. And we got a loss on that trade. So 3 out of 6 this week, not the best. But to give you guys some context, let's go to July. The last time we had 3 trades miss in a week was the first week of July, July 7th. And actually was 4. And keep in mind, guys, when we had that, those 3 losses, 4 losses, all this happened. Sometimes the winter comes, right, guys? But what happens after winter? The spring. Every time. Every time. So again, you're going to get these pullbacks. You're going to have these kind of rough weeks. We had it in July. And then what happens? We came out like gangbusters and pushed hard and made sure that we made it back and then some. Built that confidence for everybody. And with a proper market where we actually have some momentum, we're going to do well. When you have chop, you're not. So again, I always say the same thing. When the waves are choppy, don't sail. Just sit. Just wait. There's nothing to do. Not yet anyways. So let's go ahead and expand to the S&P 500 and give us a little bit of context. So we went over the options here. And you could see, and I talked about this on Threads and Twitter and the blog. You could see this resistance here from June. And that was right around 4,500. We tested that resistance. We dropped. And we bounced off 43.67. Retested again. Remember the double top that we had on the S&P just in July? July 3rd. This is literally the same time where we had the 4 losses. Tesla, JPM, SPY, and then I added Metaverse, trying to chase that long. I didn't do that this time with the team. We learned our lesson, and that's okay. It's okay to have tough weeks. It's okay to be wrong, but don't stay wrong. That's the key. So with that being said, 4,500 was a double top. Oh no, we're going to fall, we're going to fall. And then we broke out on the mid-month of July. We broke that out here above 4,500, got to 46.34, a good old-fashioned retest. That's what we're getting. Very similar to what we saw in terms of seasonality. That's it. That's it. It's just a headline. We got it with a headline. Risk happens. That's the drill. And it's a very unfortunate when you're long. But if you're short and you caught it, excellent work. But again, still choppy for my taste. So again, really the key here is 4,500 if we hold. We're at 44.98, give or take. So what is really more downside risk that we have? Right around 44.27 to 4,400. If we start breaking below 44.80, I have no problem playing the short down to 44.27 and then see what we can get from there. Let's go to NASDAQ. Very, very similar price action. You could see that we had this resistance here around 15,460. We're at 13,362. Not at the low end of the range yet. Not low end of the target in terms of NASDAQ session lows. 15,284 being the 23.6 fib on the daily. Again, a good retest there. Maybe the 50-day moving average tests. Microsoft's below it. Apple's below it. Remember, we still have NVIDIA coming in terms of earnings, and that's pretty much it. But that's where we are, 15,185, we'll say that's your 50-day moving average. And then we'll see if we hold that. If not, 15,000 is possibly in play. But we're going to take it a step at a time. And why do I say we're going to take it a step at a time? Because we have inflation this week. We have CPI. We have a 10-year bond auction. Everyone wants to buy bonds now, like Warren Buffett is saying and Elon is saying. Everyone wants to buy treasuries. What happens when everyone buys treasuries? If bonds and prices move inversely, yields and prices. So if everyone's buying bonds, yields are going to come down. So it's kind of a self-fulfilling prophecy in a sense if people want to get low rates. They just buy more bonds. So the CPI number will be released at 8:30 in the morning. In terms of a month-over-month forecast, we have a 0.2% forecast on the headline number. The year-over-year, we want to get a 2 handle. I don't know if they have the forecast yet set for CPI year-over-year. Let me see if I can get that. We'll go to the next week. CPI year-over-year expectations is 3.3%. So they're expecting higher inflation. Interesting. Core CPI, 0.2% is the expectation. Then we have unemployment claims and core CPI and core PPI. So remember, the ISM prices paid on services and manufacturing is still coming down. July was the peak of inflation. That was the peak of oil prices. This is the July number. So this is probably the best number you're going to get, at least on a rolling 12-month basis, unless we get some really strong deflation happening. But again, if CPI beats and everyone is short, what do you think is going to happen? And you're right at support. You're more than likely going to bounce and get squeezed. So I'd be extremely careful on going short or even going long in a medium-term setting, at least for the week when you have such a binary event, just like NFP. NFP, we got the bounce. We were great half the day, and then we fell towards the tail end of the day. So it really is the expectation. What do we expect from the CPI number? 3.3% on a year-over-year basis. Wow, that's a very low expectation. The last time I saw something have extremely low expectations was one name and one name alone, Amazon. Amazon expectations were on the ground. They didn't know if they were doing cost cutting. Remember, Microsoft was losing market share in terms of the cloud. That was Amazon's gain. Amazon did excellent. Their best quarter since Q4 of 2020, and their stock was rated that way and priced that way. You went from 129 to 139, as high as 143, about a $10 move, 8.27% on the day. Obviously, that's a very binary event. We don't know what's going to happen. I don't have inside info what happens into Amazon's earnings or Apple's earnings. We just have to react accordingly, or you're going to guess. And if you're going to guess, guys, you're better off just going to Vegas and playing roulette. At least you'll get free drinks. But if you're trading, binary events, pure lottos, you're not going to get a drink. At least get a drink if you're going to have some fun like that. Be careful. The market will take every dime you have, as you know. So that's where we are in terms of the week, in terms of how we did this week. Again, not the best start to the month, but also keep in mind, we had the similar price action in July, and then we did very well. So, staying confident, we're going to make sure that we're prepared this week. We're staying resilient. Should I say it one more time? Resiliency is the key. Do your homework this week. We're going to prepare ourselves, and we're going to make sure that anything that comes our way in terms of breaks, up or down, we're going to play it and we're going to hit it hard, and we're going to make sure to make up for this past week and then some. That's the name of the game, guys. In GAR Capital, it's very simple. If you guys made $1 million in trading last week, guess what? You're going to come back because it really doesn't matter. You guys are all about the journey. You guys want the action. You guys want to learn. So this week, we're going to keep it on the back burner. We're going to learn our lessons and understand that risk happens. We don't need a lot of stuff open. And we didn't have a lot of stuff open. We had 3, but again, 1 was from last week. So if we kind of base it on how we did this week, we really got out of 3 out of 5, which is pretty mixed. One of them being a carryover, unfortunately. But that's where we are in terms of the week. We just got to make it up and do better. And unfortunately, let's hope that, Fitch is the only one that downgrades after hours. If we're going to get a headline, at least give us a chance to get out of our positions, not do it overnight with options where we can't do anything. That's the worst thing. So that's what I see this week. We do have the CPI number. We do have the inflation data. That's going to be the big one to set out. After that, guys, we have the PPI and then really not much. We do have the Jackson Hole Symposium. That's in Wyoming. Let me see if I can see the next week. The week after, we have core retail sales and then FOMC meeting minutes. So the week after, not much going on. And then the week after that, the tail end of August, we'll have the Jackson Hole Symposium. And that's, if you remember in 2022, that's when we got that slide into September. So let's keep an eye. Based on seasonality, we should get a little bit of a bounce. Maybe we're starting to get a little long in the tooth in terms of, people shorting. You can see put-call ratios are not exactly elevated either. So maybe people start trying to buy the dip here. We really just have to wait and see approach. So Thursday looms. That's your inflation data. Do we bounce off this support? Do we slice through it? That's going to be the question of the week, and we will do the best we can with the information we got and the action we got to make up and kill it once more like we did in July. Thank you so much for taking the time out of your day to join me again. I will see you guys on Monday for the next morning note on YouTube. Turn on notifications if you haven't already. And if you haven't joined our blog, make sure to do so. Very, very simple. You go to gar.capital, www.gar.capital. And you go to the one-stop trading community. If you want to be part of our market blog, you access our Discord. And then you always go to get free plan. And then you get set up for the free market blog. We'd love to have you on board. More great things to come. And also, guys, if you haven't already, go to the market blog. And if you go to the welcome start video and you're not sure how our Discord works, there is a video there. Also, on the blog, I also posted our videos from 2019. It's our videos for options. So if, let's say, for example, you're not sure how options work. We'd love to have you on the blog because we have all the videos there for you. Let me see if I can find this video. So jump to the present. You guys want some weekend watching? I'll show you right now. Let's see if I can find it here. Here we go. Our options course here. All here, guys. Options courses 1 through 13. All YouTube. Take a look at that. Be on the blog and you'll get all access to these videos. These are free. These used to be $149 for the whole deal. I just hooked you guys up. So I'm going to let you guys take a look at that and I'd say some weekend watching for those who would like to learn a bit more about options. Options trading for our new guys. And I'll just tag everybody. That'll be the last one. And again, just click on there, guys, and then you have the exact link and everything set up. So again, we're here to help, and hopefully you guys enjoy these videos. So again, if you want access to the options course, come to the actual market blog, click on that link, and you'll have everything right there ready for you so you can enjoy your weekend, learn a little bit, and if you want to hear me talk all day, there's your option right there. Thank you guys so much again. Have a great weekend. I will see you guys on Monday bright and early for the morning note, ready to kill it, ready to win. Let's do it.